Everybody seems to be getting in on the crypto craze, and it's not surprising to see investors coming from the other side of the spectrum to also invest in Dogecoin. Yeah, you heard that right. Some people from competing cryptocurrencies, such as Ethereum, have also invested in the so-called meme currency and have benefited greatly. Let us look at the world's youngest crypto billionaire, Vitalik Buterin, who actually amassed a considerable return on his $25,000 investment, which later profited him an upwards of $4 million on his Dogecoin investment. Stick around to find out how he was able to make so much money just from an investment which seemed risky at the time. We'll also share some investing strategies which might also help you invest and get such a remarkable return in the next 5 or more years. If this is your first time on the channel, please consider hitting that subscribe button and turning on post notifications. Don't forget, you can join our free Discord group via the link in the description for daily signals and a community of like-minded traders and investors. And now you can also support us on Patreon. We have several packages you can choose from according to your particular investment goals. And we have a special offer for our first 100 members, only $9.99 for VIP access on Discord, which gives you exclusive benefits far beyond the free features. Be sure to check out the links in the video description and in the pinned comment. We also have a special discount offer on Binance. You'll get 5% off every trade you make on the platform if you sign up with our promo link in the description. So around mid-May, Vitalik Buterin became the youngest billionaire in the world at just 27 years old. Most people are unaware of how he achieved this feat, but the short answer to this question is, much of the money he amassed is due to his keen eye for investing. The creator of Ethereum revealed that in late 2016 he invested $25,000 in the canine-themed cryptocurrency Dogecoin, and despite the circumstances which predicted that it was destined for doom around that time when it was worth less than a cent, his decision truly paid off as he made a staggering $4 million. Guess who helped him achieve this feat indirectly? Well, it's none other than our favorite canine CEO Elon Musk with the power of his tweets. During a podcast by MIT researcher Lex Fridman, Buterin commented that he was impressed by Dogecoin, and despite the predictions by analysts, he gambled on it impulsively, even without a single goal in mind. He says, "I remember thinking, how can I explain to my mother that I invested $25,000 in Doge? The only interesting thing about this cryptocurrency is the dog's logo. But of course, it was one of the best investments I've ever made." With the rise in the price of Dogecoin owing to pretty obvious circumstances, Vitalik made $4.3 million after selling half of its tokens. This sum was donated to the nonprofit organization Give Directly. Of course, when making the purchase of cryptocurrencies inspired by famous Doge memes, the Shiba Inu dog also known as Cheems, Vitalik Buterin had no idea that another tycoon would boost his capitalization at the tip of tweets. We're talking about Elon Musk, who caused a rise of almost 800% in the price of Dogecoin in a single day. Despite Musk's influence on the price of Doge and other cryptocurrencies such as Bitcoin, the Russian programmer believes that there is no sophisticated malice behind it. He thinks that maybe the CEO of Tesla and SpaceX is just a person who likes dogs. It's well known that Musk invested around $1.5 billion in Bitcoin through Tesla, and that for a time he received the cryptocurrency as payment, although he backed out a few weeks ago. In this regard, Buterin says that Musk's companies will have to adopt Ethereum sooner or later. Bitcoin is a blockchain for money, and Ethereum was created from the beginning as a general-purpose blockchain, he noted. 2021 is shaping up to be the year of the Doge. At the start of the year, Dogecoin was trading for around half a cent. In May, it reached an all-time high of 73 cents. Had you invested $1,000 in the canine-themed cryptocurrency on December 31st, 2020, it would have been worth more than $100,000. The past year has delivered stunning returns, not just for those who bought Dogecoin, but also those who invested in more mainstream cryptocurrencies like Bitcoin. But Dogecoin's price is already down more than 30% from its highs. What happens if the bubble bursts? Here's what Dogecoin investors should do in a bear market. In stock market terms, a bear market is defined as a 20% drop from recent highs. Bear markets are relatively common and can happen for a number of reasons. For example, the housing market crash caused a bear market in 2008 and 2009, while the COVID-19 panic caused a short-lived bear market in 2020. Historically, the stock market has always recovered from a bear market, but don't count on Dogecoin necessarily recovering from its recent decline from its highs. A stock represents ownership in an actual company that generates revenue. Though some will lose money or even fail, most major corporations can survive even a prolonged downturn. The only value Dogecoin has is what its holders believe it has. Its wild price run-ups have been driven almost entirely by social media, particularly by Elon Musk's tweets. As of mid-2021, Dogecoin has extremely little utility. Very few merchants accept it. One reason Bitcoin appeals to investors is that the supply is limited to 21 million coins, whereas there's no limit to how much Dogecoin can be mined. A Dogecoin bear market could happen for the same reasons as a stock market crash, such as investors panic over a threat to the economy, like the coronavirus. But since Dogecoin's value is based on hype, practically anything could cause it to crash. Last month, the price of Dogecoin plummeted by more than a third after Musk called it a hustle while hosting SNL, then rose again after Musk tweeted about improving its transaction efficiency. There's nothing wrong with betting a few bucks on your fantasy football league or at a slot machine. The same applies to risking a small amount of cash on Dogecoin. But it's essential that you stick to the following rules if you're determined to invest. Only invest what you can afford to lose. The biggest rule of Dogecoin is that you should only buy it if you'd be okay with losing 100% of your investment. You may think you'd be able to cash out when the bubble starts to burst, but that's what everyone else plans to do. When panic sets in, it's very likely that you'll have to unload your coins for way less than you paid. Keep it separate from your investing budget. A good rule of thumb is to invest about 15 to 20% of your pre-tax income. But don't consider buying Dogecoin if you'd be using part of your investing budget or if you'd be cashing out of other investments to do so. That 15 to 20% is meant to build enough retirement savings to sustain you for at least a couple of decades in your later years. And Dogecoin is still way too fickle to count as a reliable investment. If you're going to buy Dogecoin, it should come out of your budget for discretionary expenses, like dining out, vacations, and entertainment. Don't take on debt for Dogecoin. Remember how the first rule of investment is to only invest what you can afford to lose? Well, if you take on debt to buy more Dogecoin, you may lose your principal investment and then some. Some platforms allow you to use margins to invest in Dogecoin. Here's how it works. If you wanted to invest $5,000, you could put down $2,500 cash and then use another $2,500 of borrowed money from your broker. If your coins double in value, you'd essentially triple your returns. The value of your investment would pop up to $10,000. You'd pay back $2,500 to your broker, and then you'd have earned $5,000 on a $2,500 investment. But margin is dangerous, especially for volatile investments, because it amplifies your losses too. In the previous example, it would only take 50% loss to wipe out your entire investment. If the value of your $5,000 investment tanked to $2,500, you'd lose $1,250 of your own money, but you'd still have to pay the full $2,500 you borrowed on margin from your broker. Investing through credit cards or cash advances or personal loans will also exacerbate losses because of the interest you'll pay. The jaw-dropping returns Dogecoin has generated this year can understandably lead to some fear of missing out. But don't let that cloud your judgment. Recognize Dogecoin for what it is, which is entertainment. It's not part of a solid investment. Thanks for watching today's video. If you enjoyed it, please consider leaving a like on the video, hitting that subscribe button, and turning on post notifications. Also, now you can support us on Patreon, and you can also sign up for our free Discord group via the links in the description. If you have any questions or comments, let us know in the comments section down below. And as always, good luck and happy investing.
Hollywood perfect. That's how it goes. Hollywood perfect.